Senco Gold is in focus. So Suvankar Sen is now joining us from Senco Gold to talk about the Q1 updates, which appear to be very strong. Suvankar, morning. Thanks so much for your time. I think, how is the situation on rains front in Kolkata? I think it got you a little late on the show, right? Or you are
Yes,
here
yes.
in Bombay?
No. It's the rains in
I
Kolkata.
can
So
understand
while
that.
it does get us late to the shows, but it does bring happiness as well. We all are hoping for good rain so that the agricultural sector gets
And
boosted up,
hence your
right?
sales go up. I understand. Fair
Yes,
point.
yes.
But I hear you guided for, first of all, some of the bigger peers, industry leaders, are actually turning cautious as far as the jewelry demand, etc. is concerned. Let's not name them, but that's the view coming in. How come you are guiding for 18-20% growth? Is it the tier 2,
So,
tier 3 which is bustling now and coming back, which is your where you want to increase your footprint?
so see, this is where we are coming from. That last year we grew by about 27%. This year, Q1 has been a little, not so great in terms of the growth. We could grow by 11% in retail sales growth and 9% in terms of the overall growth because of the high gold price, the heat waves that affected the retail market, the lesser number of weddings that were there in the first half of the year, and overall the election, which is like once in a kind of a 5 years scenario, which brings in a little bit of cautiousness and liquidity crunch overall in the market, the sentiments, uncertainty. So these all led to the Q1 being a little slow. But we are very hopeful that in the past also we have seen that in the jewelry industry there are certain quarters which becomes unexpectedly slow, but consumers postpone their decisions and then they put it all on a particular quarter for making up for the loss in the previous quarter or the quarter that went away. In terms of the gold price itself, it has grown by 15 to 20%. So even with the volume growth not happening to that extent, logically the endeavor and the effort should be to get a growth of 18 to 20%. Yes, 2-3% here and there is always a possibility, but just by the end of Q1 to assume that that will happen is not the right approach and not a very optimistic and a positive approach. So we will have to wait for Q2. We are preparing ourselves for the Dhanteras season, for the festive season. And that point of time, everyone, be it the weddings or purchases for oneself, it all happens. So by the end of Q2 and beginning of Q3, we will have a greater picture and a more correct picture. So this is how we would look at it. Yes, in terms of margins, if one looks at it, because of the competitive pressure, gold prices going up, and everyone is wanting that in this slowdown how to sell. There are heavy discounts that are being given to attract the consumers. So that is a different aspect in which the margins will be under pressure. But in terms of business growth, we have seen growth happening. So that is how we are still being very positive.
So you're saying you'll be able to do better than what you had guided for earlier in terms of growth because, Q1 seems to have started off on a dull footing.
Not better. We had guided that our focus, our target is to grow by 18 to 20%, and we would continue to maintain the target. Just the Q1 should not become a aspect to look at and become a little disappointed. Yes, we all want to grow, but I think we are keeping our same expectation and the estimates that we are aiming for.
So, Ankur, which are the new cities you are looking at entering? How are your discussions going on with some of your franchisees in North and Central India?
So our focus on growth is going to be more on eastern and northern part of the country. The various eastern India states, if you look at it, the surrounding states, not only Bengal, we are amongst the leading brands, but also in the surrounding states, there are ample growth opportunities. The tier 2, 3, 4 towns in those particular markets have an immense potential to grow. So we will continue to focus on that. Maybe we will not be very comfortable to name and identify those towns, but let me tell you that most of our growth will be in the smaller towns of Eastern India and Northern India. We're also going to have it in the pipeline, be it our company-owned, company-operated stores or our franchisees. And there are franchisees who are interested. They are in the pipeline. We have opened 6 stores in Q1. And our expectation and target is to open 18 to 20 stores for the whole year. So Q2 is going to be very critical. Q3 is festive, so everyone wants to open all the stores by Q3 to get the results. So that is how we are looking at it: a combination of own store and franchise.
And you're well funded for that, right? All the expansion that you just talked about.
Yes, yes, yes. Obviously, we have opened 6 out of the 20 that we had aimed for, and there are more in the pipeline. So that is all in progress.
The other thing that I wanted to talk about, Suvankar, was whether the fact that gold prices have skyrocketed already, is that really impacting your sales? And are people now moving towards small ticket purchases, especially in tier 2, 3 cities, as opposed to what they would have perhaps a year back also?
So let me give you a very interesting insight. We were doing our analysis, and the skyrocketing gold prices, be it in the tier 2, 3, 4 town cities or the bigger cities, we have seen that the average ticket size or the purchases that are happening is more on the higher value products than the lower value products in terms of the growth that we are seeing. So maybe because of the the Gadbandhan wedding collection that we have been focusing upon, or the Bangle Utsav that we've done in the month of April, May to focus on bangles as a category. So the focus has been, it's actually the people who have the funds to buy, they are ending up buying. But it's the people, the people who have limited budget. For them, maybe a 25, 30, 35,000 rupees is also very important. So for them, I think they are the ones who are trying to postpone their purchases unless it's very necessary. So it's not that the small ticket size items are selling more and the heavy ones are not. It is the heavier ones which are seeing a little higher growth than the small ticket size. So that's the contradiction in terms of thought, because those who can pay for the increase in gold price are paying, and those who think that no, the marginal increase is impacting them, they are postponing their purchases.
I also want to talk about, Suvankar, the common narrative. So the product you deal with is a very discretionary product. The time to buy actually comes in when other demands of the household are actually met. The narrative for the last year or so actually has been rural versus urban. How's the affluence happening? Some people say affluent Indians are actually spending a lot, but rural tier 2, tier 3, the spending capacity has gone down. Then the entire point of rural poor versus urban poor also comes in. But the point is that lower income strata was not spending so far. Now that you're going deeper into the country, eastern and northern, are you seeing rural some green shoots coming in? RBI governor talks about it, some others are also saying. Are there any green shoots? Is demand purchasing power coming back, or still it's the affluent only which is driving demand?
No, no, no. I think that it is not the affluent only driving the demand. The level of poverty in the economy overall has I think reduced drastically. What we have seen over the last say 10 years, 15 years, whatever could be a timeline that we can judge. But the the commitments of individuals towards multiple areas of expenditure, that is where I think that people are wanting to kind of prioritize their expenditure. And as you said, that jewelry is a discretionary, it is an integral culture of India that yes, every year one should buy some jewelry. And also not only in the urban India, more so in the rural India, the agricultural income that in a large way in a savings form, it goes towards jewelry, towards gold, so that in terms of crisis or need of funds, that acts as a collateral for the individual as well. So that has always been a culture and a part. And in the last, I would say 1 year, 1.5 years, compared to post COVID, where we saw that the urban growth happening at a higher rate than the rural growth, I would say that in the last 1.5 years, the rural markets have also been growing and in the same rate as much as the urban India market. So it is not that there is too much of a diversion, and we are expecting that going forward, rural India will go, because the aspiration is there. They are also inclined to buy from brands, from from good quality products. The information level and the system and the knowledge and the demographics of the rural India is also evolving. So those are the support and the tailwinds towards growth. But yes, in terms of the liquidity availability, the way urban India uses credit cards, the way the credit availability in the urban India has been much more I would say focused, growing. I think that is where the FMCG sector are also, if you look at the news, that they are trying to and hoping that rural India will drive their growth. I think it is the liquidity availability that needs to go there, and that will boost further towards whatever growth is happening in rural India.
Suvankar, we'll let you go on that one. Thanks so much for joining us on the show. That was Suvankar Sen. Good numbers, at least the provisional numbers for Q1 have been good, and he was talking to us about how the roadmap could be from here on.
If you like this video, then like, share and subscribe to ET Now.